I have a very special guest with me today, Peter Tuchman. Welcome, Peter. How you doing?
Thank you. Thank you. So grateful to be here, and thanks. I'm honored to be near the number one there. Sounds great.
Yeah, first guest. It's an awesome way to start. Someone as experienced as you. So I know who you are. Everybody knows who you are if they've seen anything. If they turned on CNBC, Bloomberg, everyone's seen your face. But why don't you tell us who you are and what you do and what you mean to the floor and the New York Stock Exchange?
Awesome. Great question. Thanks for asking. You know who I am. I'm really a function of an incredibly long, wonderful journey, how I got to here. And it's involved finance, it's involved family, it's involved spiritual empowerment, it's involved education, and it's involved stocks and markets. That's obviously my great love, and as well as education for sure. I grew up in New York City, and my father was a doctor. My parents are Holocaust survivors. Came here in 1949 after an extraordinary early childhood, obviously a deeply traumatic period through 1939 to 45. They ended up falling in love after 4 years in camps, coming to America, and sort of realized that their American dream. And so that's an incredible story of survival and empowerment and the resilience of the human spirit. And that's really, I think, one of the things that's part of my makeup and my DNA. So it's important for people to know that. And grew up in New York City, privileged background, truly wonderful family, wonderful parents, and brother. As a youngster, I was sort of a wild and crazy guy, entrepreneurial spirit, all kinds of wheeling and dealing in business, growing up in the 70s in New York. And so my interests were music and travel and family and skiing, sports, and wheeling and dealing. One way or another.
Entrepreneur. All sorts of things.
Question. I wasn't clear at that point in my life whether my future would end up as it did, but obviously it's a wonderful long journey. I ended up going to college at the University of Massachusetts. I was joking with my daughter yesterday. We were talking about, my story has so many nooks and crannies. We would always kind of wonder how many of them are real, how many of them are imagined. Things are just a wonderful level of exaggeration.
But you live a wonderful life. You're a product of the American dream in sorts. I mean, I'm not American, I'm Canadian, but a big fan of the products that America does produce, and you would be one of them, right?
And look, in Canada, it's so similar. I mean, amazing foundation of entrepreneurship there for sure. And you guys at Stock Charts are surely a perfect example of that.
Well, we appreciate that.
They love, and they've just exploded it. And I just love your message. So that's great. So I have a degree in plant and soil science. I have a degree in international business and economics.
So I went on
back. What's that?
So you're super smart.
Perhaps. I ended up coming back to New York after college, and I started trading commodities. So I finished school. I came to New York to get an MBA, which I never actually finished, but that's a whole nother story for the ages. It was 1980. Let's just be clear of the setting, right?
Okay.
Studio 54, whatever. So
party town.
Attempting to get a master's in business and economics and accounting. I was starting to direct myself towards business. I have a way older brother who my father adopted during the war, who is a businessman, who's into markets and stocks. My dad was a doctor, so my direction was not business related until mid-college, where I realized, you know what, I think I'm going to follow in the footsteps of my older adopted brother and get it. And he was an incredible mentor to me, right? He had survived the war with my dad. His parents had been killed. He was 8 years old. He came to the States.
Yes.
And he founded a beautiful life here with my parents, actually. He was still 18. He ended up getting into business in the petroleum business, engineering business, and went on to be an incredibly successful guy. And he was big in the stock market. So that was
big time,
into the business. I started trading commodities at home with some money that he had given me. And I was
Was
actually
it
able
oil?
to,
Is it like energy related commodities or all
no,
sorts?
it actually wasn't. I was I'm fascinated with numbers, and I was starting to, back then you could look in the Wall Street Journal and track the daily, monthly commodity prices, right? And I found that kind of intriguing. It's something right up your alley. We don't see it that much. I don't know if it's even still in the Wall Street Journal, but you see the way orange juice is trading, potatoes were trading, oil, some other things. And so I was sort of fascinated by the way the numbers set up, and I came up with a strategy that I don't think had any basis in reality. It was just, it felt like I could see where the numbers were going. So
Okay.
I took $5,000 and I turned it into $45,000
Wow.
over about a 3-4 month period of time.
And back then,
1980,
a lot of money, right?
that was a lot of money. Unfortunately, though, and this is something we'll talk about later, I didn't have the foundation. I really didn't know what I was doing. I was intrigued by it. I loved the fact. And I ended up sort of similar to a Trading Places story. I ended up losing all of it in one
Seriously.
day. It
Oh
was
boy.
it was one of these orange juice future days. And orange juice was what I was trading. And as I said, I did not know what I was doing, but I was having fun. I was getting a master's in business at night, and I had opened up a record store in Bleecker Street in the West Village in New York City.
What was it
And I,
called? If you don't mind me asking.
Corona Record Gallery. After the Norwegian money, I had spent some time in Norway, and it was a place I really loved. I had sort of spent a lot of my college career managing jazz bands
Right on.
out Europe and producing concerts and whatnot. So jazz was sort of a thing, business was a thing, entrepreneurship and whatnot. So it may have been in a sort of a epiphany, middle of the night. Who knows what kind of infused decision
Something
it
that just came along the way. Most businesses happen that way. Stock Sharks was founded that way. It was just an idea one day, and then we just merged it together, and boom, it works.
You know what? It's funny how that happens. It's circumstance, coincidence.
Yep.
The time right. I opened this store, and it was sort of it was a dream. It was a conquest that I was going to do. I was going to make a European style record store, which back in the 70s and 80s, Europe used to have these places where you could go in, have a coffee, listen to music in these listening booths.
Right.
I created sort of an African art gallery. It was I was opening my living room to the public, really. And it had moments of success. It became more of a place where all the great jazz people hung out, and it was a really fun place. To go back quickly to the commodity story,
Yeah.
I was trading against an orange juice announcement, like in Trading Places, curiously enough, and I was on the wrong side, and the orange juice news was not what I had thought, and orange juice went down limit. I don't know if you guys trade commodities. I surely don't
You
after
heard
that.
guys do.
Yeah,
Mostly we're equity guys.
yeah, me too. That was my last. I went down limit 5 days in a row, and my $45,000 became worth $1,400. Right, so I lost it all. It was
reality check.
It was fast, furious, and devastating. I ended up going on to trade potatoes, which was the only thing that you could trade with $1,000. Anyway, that was that. I never did that again. The record store was open for a while. That didn't turn out to be that successful at the time due to a number of factors. The record business was changing. Tower Records opened, which was a sort of a big mall type place, all
thing.
knocked out. And I ended up moving to West Africa.
Yeah, you're all over the place. You're like a Renaissance man.
Correct. Exactly.
Most man on the planet here. Keep going. West Africa. What brought you to West Africa?
So I had a friend who was running a Norwegian oil company in West Africa, in the People's Republic of Benin.
Okay.
And I closed my record store. I closed down. I bailed out of school, a couple of credits short of a degree, and things weren't really working. And I kind of needed to do a geographic and get out of town. So this was as far away as I could go, right? Yeah. Nobody's going to come and get me or follow me.
No one knows you in West Africa, that's for sure.
Exactly. So it was kind of super exciting. It was a communist dictatorship at the time, not something I supported at all, but it just happened to be the way it was. It was a democratic country, had been taken over in a coup, and they had a lot of oil reserves, right? coast of West Africa is one of the most robust places for natural resources in the world. Diamonds, oil, iron ore, whatever. So I ended up, computers weren't out yet. So I'm kind of dating myself. 1983,
Yeah.
there weren't computers yet, right? And they were just starting to come out. And these guys were producing oil off the coast and whatnot. The Norwegian company came in and sort of took over the national oil company, and I was the guy doing the accounting for the company. And
Okay.
like learn in the fire. I did not know anything about accounting. I had flunked accounting in business school, and on the trip
Did you
over,
mainly get the job because you looked the part, perhaps? Like this guy.
I don't think so. I think I got the part because I had a friend,
Oh,
right?
okay, gotcha.
That's often been my case where, you know what, I was in
That's
the right
always
place
the case.
at the right
Always
time.
the case. It's always who you know. It's always who you know, not what you know.
Correct. So I actually studied I don't know if you know what Lotus 123 was, but it was that
Yeah.
Lotus 123 was the first spreadsheet that came out when computers started to
Okay. So the
become
original
popular.
Excel.
What's that?
The original Excel.
Correct. It was the original Excel. It was literally, it couldn't be more basic, and my mind couldn't have been more basic. So I studied that. I kind of sold myself as as account executive, and I ended up doing the accounting for the company for a year. And it was an extraordinary time. It kind of cultivated my Renaissance-ishness, if you want to say that.
Yeah.
We got deep into what was going on in West Africa. We were hanging out in the weekends in these wild villages and doing kind of cool stuff.
How many years were you there?
What's that?
How many years were you there?
I was there for a year and a half, from
Year and a
83
half.
to 5.
Wow.
And it was extraordinary. It was, it is a place in the world that most people don't know, but it happens to be where I was, Benin, which was where a lot of slaves came from in the early part of the prior century and whatnot. A lot of resources and whatnot. Voodoo comes from there. We ended up. I stayed there till 85, and then I left. I came back to the States,
Gotcha.
and I ended up getting a job on May 23rd, 1985.
That was the date exactly.
I remember the date. Actually, the date I got engaged to my wonderful wife. And as a teletypist on the floor of the stock exchange, right?
Okay.
My father had a patient who ran Cowan and Company, which was a brokerage firm back then. Had been in the years had been taken over by Sogen, the French bank, and so it was my first inroads into the floor. And what was so amazing for me was, the floor of the stock exchange. And I hope one day you guys come and visit me down there and be my guest. Is sort of an extraordinary microcosm of the finance investment community, but also it's called the street for a reason. The floor of the stock exchange, what originated in 1903 as the main room, which is an incredible vaulting ceiling and gold ceiling and beautiful building with architecture and whatnot, and amazing history.
How many square feet would you say it is? Because when you see it on TV, it obviously looks a lot smaller, but I'm assuming it's a lot bigger.
You know what? It's pretty huge. The ceiling has got to be more than 100 feet tall.
Okay.
I would say the room is probably 100 by 100, probably bigger. It's a huge, huge room. Okay. And that's just the main room, right? That was the original room that's got brokerage firms around the outside, right? The going back in the day from the Morgans, the JP Morgans and Merrill Lynch's, these little booths, right? Stalls, which you've seen in movies, you've seen on videos, connected to trading desks, right? As we know, brokerage firms have more in the old days than now. Surely not in the COVID world, but
yeah, that was actually one of my questions I was going to ask you. What would with COVID and everything, how much of a difference has it been? Like with obviously not social distancing and not many people around, but how different is it now compared to say your first in 1985 getting there? Is it like a ghost town?
So I hate to describe it as that. To me, still, and I'm just coming back after being ill and whatnot, is the most exciting room. The energy in that room,
It's still electrifying.
We're running at a skeleton crew, sheerly due to safety, right? We want to keep it open. I'll tell that story in a minute. But when I got there in 85, it was the height of open outcry. There was 1,564 brokers. There was probably a support staff of 5,000 people. From 85 till 95, we not only had the main room, we had the blue room, we had the garage, we had the expanded blue room. We ended up having 5 massive pieces of real estate where there was trading. Stocks were going public like wildfire. It was, so look, pre-computer, there were Quotron machines, which were those sort of static teleprompters that you see in movies and whatnot, maybe before your time.
Well, I read in an article you weren't in 2014. I read in a BuzzFeed article you weren't a fan of electronic trading at first. Are you still not?
I was the last guy. I don't own a computer. I'm not a fan of technology. I was the last guy on the floor to actually go from the paper pad to the handheld computer. So, I'm still not a fan of it. I fought it as long as I could. It's bigger than I am. For me, one of the things that made the floor, and I realized it day one, was that human element. And it's something I try and share with people all the time, which makes us still relevant, still exciting. The bottom line is, if you use the analogy that, if you get on a plane, people are funny about money. Money's a curious thing, right?
Oh, yes.
You know that there's a human being on the other side of any kind of a financial transaction, right? I get frustrated when I got to go to an ATM. I'd rather go to the teller. I'm not particularly comfortable if I were to get on a plane and run into turbulence and go to the cockpit and see that there was a couple of blow-up dolls, flying my plane like an airplane, the movie. Right? That human element, the human judgment, right, surpasses all benefits that you may get, in my opinion, to the electronic marketplace. Obviously, we can't fight technology. There is electronic trading. It is the way of the future to a certain extent. But what we've seen so important now, highlighted by the pandemic, is, let's go back for a minute, circle back to May 23rd, March 23rd, 2020. Pandemic had been announced on the 15th. We had just gone from February 12th of the highest market across the board in every indices to March 23rd, the sell-off of 10,800 points, double digits in the S&P and NASDAQ, careening off of a cliff, right? And the virus completely spreading, causing the floor of the New York Stock Exchange to close, right?
Right.
After 9/11, when we realized that the world was changing and there was terrorism, there was crisis, there was possibilities of a pandemic, the people and the powers that be at the stock exchange realized that the worst thing that would ever happen, as we've seen going back to the movie It's a Wonderful Life, when people don't have access to their money, especially in times of crisis, you get panic. It's panic. And panic doesn't serve anybody. So what they did after 9/11 was they created an alternate marketplace, electronically and physically, where in case of a crisis, God forbid a pandemic, the markets would be able to stay open and run.
It's like 11 different systems, right? 11 different computers.
Correct.
Correct. There's like a lily pad where, like, if one gets shut down, it all gets flooded to another one. Am I correct or am I wrong there?
I don't know the particulars of that. All I know is that, look, back in the day, the floor of the exchange did 80% of the volume. There were a few electronic trading platforms that did 20%. As the whole nature of the business with electronic trading technology changed, and they deregulated and let other trading platforms be born, right, all over the country. I think there's 70 of them, whether it's BATS or some of the other ones. I mean, you guys know, all you need market is a buyer and a seller, right, and a computer, right? And if you can do that, and whether you buy order flow or you just create a place where people come to you that's got some liquidity and volatility, you're going to get people to trade, right? So what they found was that they needed, in case of this situation, was a place where people could go electronically, God forbid, in a crisis, to have access to their money and to trade. And what we saw was on March 23rd, as the exchange closed due to the virus, right? I got the virus on March 15th. By March 20th,
why you have your neck brace, correct?
Correct. So they closed due to health concerns. The markets themselves stayed open. in New York and globally.
And some people were advocating for it to shut down, which would have been terrible.
Correct, which would have made no sense at all. And they had foresight on that. They knew that there was no reason for the market to shut down. We had seen while the markets are an amazing thing. It's an auction market, whether it's electronic or not. And we know historically from the crash of 29, World War I, World War II, 9/11, Brexit, Trump, whatever the hell the situation is, markets can handle crisis as long as there's transparency of information, there's communication, there's access to money. They will eventually even themselves out. And we've seen that bore itself out in spades, especially in this pandemic, correct? Right?
Yeah, that was my next question I was going to ask you. Since the market just crossed 30,000, you have the famous hat that went viral all over the internet. I'm not going to call market top, market bottom or not, but with all these IPOs, we've seen pretty much the electric vehicle bubble sort of a market going on, these SPACs. Have you seen an unusual, more so amount of buying, or is it business as usual?
By no means, it's not business as usual. I think we need to go back and to answer your question in a responsible fashion. We need to really, and I'm not a conspiracy theorist, but I'm a forensic broker. I trade on the part of hedge funds and proprietary trading desks. That's what I do. I don't trade for my own account. I've never owned a share of stock in my life. But what I do as an educator and as somebody who's part of the media is I try and explain to people. Disclaimer: I don't recommend stocks. I'm not your financial advisor.
Of course. We'll get all that in the free episode.
Right, exactly. I will try and explain to everybody why markets do what they do on a daily basis, which is, for me, what we learn from historic data is super significant. And what we've learned in 2020 is all the more important. So let's be clear. February 12th, we hit a record high. The pandemic wasn't really in our crosshairs yet. Over the next 6 weeks, it became apparent from China to the Middle East to Italy and whatnot that this shit was real. The people were dying. We were looking at a potential global economic shutdown and slowdown, and we were in a situation that was unprecedented. So the market, whether some people say it was that the insiders got from Professor Orange over there, the inside tip, as we saw a lot of people do in mid-February, when they were given the inside look that the shit was happening, a lot of people bailed. A lot of hedge funds sold. There was no question that the move from 29,986 on February 12th to 10,600 points sell-off, 20% plus sell in the S&P and NASDAQ to the bottom, let's hope it was the bottom, of March 23rd, obviously many contributing factors. That made more sense than
a souffle of disaster. A souffle of disaster. A souffle of disaster in a very quick time.
Correct. So whether it was a lot of insider trading, whether a lot of insiders selling, whether it was the fact that when the markets are at record highs, in this environment, people are margined and leveraged up the wazoo, right?
And with interest rates at practically zero, they're going to be margined up the wazoo because what's the risk?
Correct. So we had just gone through 4 years of a market rally from 15,000 to 29.9. People were making money. The consumer was robust. We were at record highs across the board. Unemployment was low. Interest rates were reasonable. And it made sense to be margined and leveraged.
Yep.
However, when the shit hits the fan, you got to
liquidity-driven event.
Clean up the shit. What?
The liquidity-driven event. The one thing that just got everyone to take everything off the table that one time.
100%. And that's what caused that's what happened in that 6-week period of time.
Okay, so question for you, as someone who's experienced this and seen this before, was this the fastest drop you've seen compared to, say, a tech bubble, the 87 crash? Was this the fastest quick grab off the table and then put back in?
It was the most severe. And it was not. Let's not look at the quickest was the crash of 87. It was a one-day event caused by a couple of cloudy days, right? By the time Monday and Tuesday came along, we were already back up, right? Wise, it was the biggest,
okay,
right?
Okay.
It fast and furious sell-off for a lot of different reasons. We can go into that later. I would say what made this sell-off way more significant was where the market was at the time. Okay.
How people were positioned.
What's that?
How people were positioned.
Correct. The leverage, the margin. Um, and the fact was, there's what we've seen. You asked me if I had ever seen anything like this and whether this is business as usual or whatnot. There's no way there is business as usual. First of all, we've seen economic crisis before. We've seen global defense crises or whatever it was, whether it be war or whatnot. But never before have we seen a health crisis that basically scorched the earth of every human on the earth, right? There wasn't a soul that hasn't been from Timbuktu to Kathmandu to Antarctica
affected by it.
By this experience.
Correct.
Say this too. So the sell-off was fast and furious. It was a function of the things we've described, besides fear, anxiety, and needing to get into cash. Okay. I believe, though, if it was not, and then we saw on March 23rd, the Federal Reserve steps in. They throw $3 trillion at the market.
A torpedo.
Correct. So let's look back to 07, 08. 1.8 trillion was put into the market over 3 months,
Right.
over 3 years.
3 years,
Okay.
yeah.
This was $3 trillion put into the market over a month and a half. That's a lot of gasoline on a fire. They bought everything on earth to support this thing. And so, and plus, then on top of it, you saw everyone's sheltered in place. People have lost their jobs. People are seeing this complete reversal of the market. We saw Robinhood, TD Ameritrade announce an 84% increase in retail investing.
Robinhood's going crazy.
Traders.
Yep.
What's that?
Robinhood's going crazy with all types of, like you're saying, new time traders, new type of investors. Because people have nothing to do at home. With the shutdown, they need purpose. They need something to do. And Wall Street's sort of become the only game in town.
Correct.
A complete disconnect from reality.
Correct. It was a little bubble of non-reality. It was a shelter in place. It was the perfect storm in so many ways. As the sell-off was the perfect storm, when everything lines up in a shitless fashion, or when things all line up in a positive fashion. Like you've got the Federal Reserve backstopping whatever trade you wanted to do. You've got people at home not knowing what the heck to do.
Well, like Hertz, perfect. Hertz, a company like Hertz that went bankrupt, people were bidding the stock higher.
100%. We saw Eastman Kodak that first of all was trading in bankruptcy for years, right? Had not adjusted themselves to the new world of cameras. Suddenly get a $1.4 billion loan to make vaccines, and it went from 50 cents to $60. Does that make any sense? Absolutely not.
0 cents at all.
Okay. Were there some portion of
besides human greed?
Human greed and the concept in people's heads that this is a get-rich-fast scheme. And I think if we give out any other message, and you guys, I love all your message. Your social media is extraordinary. For me, a better business. For me, I look at it better than I look at a newspaper. Informationally, you guys are amazing. You guys are so on point about talking about IPOs and digital stuff and individuals who are contributing opinions and stuff. You're my go-to guys now. So I think that's awesome.
We appreciate it. Yeah, our main focus is to try to get because there's so many. I don't want to call people grifters or charlatans out there, but there are people like you're saying looking at the market as a quick get-rich scheme, and it's just not the case. There's more. I always tell members of our premium service that I've lost more money selling stocks early than selling stock early than trying to trade quickly. Right? There's so much more money to be made on the upside long term than there is in the short term if you hold in long term for a company. Right? So that's mainly our focus, is try to get a message to get more of the perception of the markets to understand the true long-term value of it.
Historically, markets go up. We've seen it after everything. Historically, every crisis has been a buying opportunity, not a selling opportunity.
Okay, well, curveball question for you, because you're someone who's probably traded with interest rates above 10%. If interest rates do start to rise, does the dance sort of end and markets do go the other way?
You know
not
what?
Top call, but sort of does the market go the other way? Does momentum start to wane out? Sorry, I'll rephrase that. Does momentum wane out if interest rates were to rise sharply?
Okay, so let's see. One of the things that's changed, you asked me business as usual or different. There's nothing that's going on in terms of the market, volatility, liquidity, the relationship to the normal rules of thumb,
Gotcha.
inverted yield curve, interest rates. My daughter calls this no rules 2020. What's going on, there's no framework or playbook for what's going on. Okay, so in a normal world, okay, where let's be clear about who's involved in the market. I was watching a piece this morning. Christina Alessi, who works for CNN, talked about it. And I try and bring it up a lot because the biggest question I'm asked is, Peter, we're looking at an economic slowdown. We're looking at 8 million people into poverty. We're looking at 14 million people whose unemployment is expiring. The last 2 weeks in a row, we're seeing another spike up in unemployment. You know, we
Food
are,
lines,
we
food bank lines are all-time highs as well.
Food bank lines are at an all-time high, yet the market's at 30,000. What the heck is really going on? So let's talk about it. 14.6% of the American population have some exposure to the stock market.
Correct.
6% of the American population are actively involved in the stock market. That means that the wealthy and the top 1% are those who are in the market and are benefiting from this rally. So what does that really tell me? That tells me that, and then we've got the other little thing, which I'm happy about in a lot of ways, but concerned about is this massive spike of 84% of new traders, new retail investors, people getting involved in the market. So when people are buying Kodak at $60 because they heard some schnook that's buying it, or they are making decisions not based on technical analysis, I always say hope is not a strategy for trading, right? Markets that are trading in volatility mode the way they are today are so much more important to go back to the brass tack fundamental foundation of technical analysis to trade, right? Let's look at, I'll give you a perfect example of it. We're seeing a lot of enthusiasm around the vaccine. We're
Yep.
seeing Pfizer.
I think a little bit overreactive.
Way overreactive. Relative. Look, the stock market is a place where corporations go to let the public be involved in their profitability or loss.
Yes.
Okay. The bottom line is the enthusiasm about a virus and a vaccine, about the vaccine to help the virus, is excitement, and it's duly coursed excitement. However, as an investor and as a part of the investment community, the bottom line is if you do look in the nooks and crannies of the business model, Pfizer's not going to make any money selling the virus. It's not a good, smart business decision when Pfizer comes out.
There's never been a single vaccine company that's ever been profitable.
Correct. And this is going to be a completely cluster heck.
And that's not me saying Pfizer's not profitable. Pfizer's a great company.
Pfizer is a great company, but the vaccine business model is not a profitable one.
No,
it's not for Moderna. It's not going to be for AstraZeneca, because the bottom line is they've spent billions getting it done. They're going to spend billions getting it out there. We're not clear how the logistics are going to work. And the bottom line is it's being going to give it away for bare money. So that's not it. So in reference.
Would you say there's more of a systemic flaw then of how the markets are made up, that perhaps of how money is distributed, or just more a perception flaw of how humans look at the market as sort of a casino to cash in on?
So once again, new rules 2020. We've seen markets go through crisis and whatnot. Each time you see markets go up and down volatility, and the attraction of the market gets into people's focus. The majority of our population are it's very hyper focused on stuff. We see it in markets, we see it in our lives, right? We can only handle so much, and then we get super excited about stuff. Each time one of these things happen, it opens up the door to a new group of people who start getting involved in the market.
Yep.
You know, in 1950, the regular American in the population or in the world was not in the market. Their grandfather may have had an account, or they had a relationship to the market through some 401k or something, but they weren't actively trading. They watched, ABC News at night, and Walter Cronkite said the market is up 3.2 points today, and it was a very volatile day. You know what I'm saying? That was what we grew up with.
Now, the market doesn't even close at 400 points. People aren't talking.
We have had nothing less than a 1% move, not only for the pandemic, but since Trump got into office. So it's a whole nother landscape now. So in answer to your question, the long way to get there about interest rates is, you know what? There are people who are going to change their strategy if interest rates going up. Interest rates mechanism between the Federal Reserve, it works, right? It has a purpose. When we raise them, there's a reason. When we lower them, and
they have not been raising for a while.
well, look, we look, but look at the reversal that we had over the last 2 years within Trump.
Yeah.
Powell, we went from raising them and we did a complete 180 because we ran into some economic problems. What was the first thing that made us reverse it was the China trade story, right? We saw we were raising interest rates into a rallying market. That's counterintuitive. And so then what they were saying, this is like 2 years ago in 16, right? We saw the market, they were raising them a quarter point every 3 or 4 months.
Right.
And it was counterintuitive because you don't raise the market as the market goes up. You raise
the market would
to
go up, and then they raise, it would drop, then it keep going up, then they drop, and then eventually just flushed out that one December.
Correct. Yeah. So what we saw was that the rules started changing a little bit then. And then what we saw was they did a 180 on it and said, you know what, why are we raising it? Why are we raising interest rates as the market's going higher? Is to protect us against what could be down the line in the future, right? Which was the China trade story or other economic obstacles. Then they did a 180. They started lowering them. And if you'll remember, coming before the pandemic, they knocked the living heck out of the interest rates because they saw that we were into some problems.
Yeah. Yeah, Trump got what he wanted there. He wanted interest rates to go to next to zero, right?
Correct. Exactly what he did. He was really putting his knee on the neck of the Federal Reserve. No question about that.
Which is very unusual to see, right? Because there's supposed to be a disconnect between political.
There's supposed to be a wall there. It's absolutely unprecedented, unprecedentedly, and unprecedented and inexcusable. That's how we maintain some certain things where these things should not overlap.
Well, without getting too political, right, I don't want to go down that. But well, how do you think the new admin bolts for the new administration coming in bolts for the market? I'm pretty bullish on it. I see it as more normalcy coming to the market, more stability, less volatility. How about you? You think not so much of a market top, market bottom question, just momentum and enthusiasm based on a Biden administration.
Okay, good question. Well, let's talk about how let's analyze it relative to what we've seen over the last couple of weeks. What's so incredible about this market is that economic trends, economic policy, market movement, market direction that used to take days, weeks, months, and generations to happen today now, right?
Because of technology.
You can actually come into work in 2016 and 17, and in the morning they're talking about a recession and an inverted yield curve and a market crash, and by noon we're hitting record highs, right? I mean, how insane is that? So, in relative to your question about Biden, the market I always joke about this, and people mock me a lot on the floor of the exchange. I always, when this market is up 1,000, and then a tweet goes down 600, and then something positive comes out, and they say, "Oh, never mind, I didn't mean that," and it goes up 700. I always say the market does what it wants to do. The market tells us what it thinks about what's happening, right? So we look historically, the Democrats, the people's perception of the Democrats is that they're pro-regulation, they're anti-Wall Street, they're higher taxes,
right.
And negative effect on perception of the Democrats versus the markets. I've never been a fan of that story. Okay,
it's just like how the Republicans are supposed to be fiscally conservative, right?
Correct. So all that's changing. No rules 2020.
To quote write that down. No rules 2020.
That's we're going to have a T-shirt coming out soon. No rules 2020. So you would think. So we were trading coming into the election, right? And the market kept going up. The floor of the stock exchange is very pro-Republican.
Right.
It's historically been that way. Okay, so we always joke about it when the market goes up. It's like Trump. The tape says Trump, right? And then the tape says Biden. What is the market telling us what it thinks? And then what we saw was, and I actually got this from my son too, because I'm a firm believer in listening to young people on their perception. They are the consumers of the world, and they are really tied into the pulse. And he said, Dad, he goes, when we were talking about, I was doing a lot of stories during election day, pre-election and post. How's the market going to react to a Trump presidency or a Biden presidency? And my son said, basically, it doesn't matter at this point. It's been so divisive and so confusing and so volatile. We like volatility, but we don't like the fact that we can't make investments and judgments with any kind of continuity. When
Right.
I'm doing my homework like you guys do, right?
Right.
And suddenly some tweet comes out that's totally counterintuitive.
Makes no sense.
I did all the homework to come up with an idea that I'm going to make a big investment in XYZ, and then boom, suddenly I have no trade deal with China. And then suddenly, boom, I'm building a wall. Or suddenly, God knows what else, or an Iran deal, or a climate deal, or whatever, right? The market likes stability. They like clarity, transparency, and communication. And that is something we haven't had through this administration. It's been exciting, and I've been loving the ride. And I don't think the ride is going to change. But what we saw was that when it became clear that once the election was over, even though it took to get a confirmation of who perhaps will win, the market was relieved. We have a relief rally. We've seen that historically. That, you know what, at the end of the day, God, thank God that is over. Whatever happens will happen, but it was a relief. Doesn't matter who wins. Let's just move on. And I think that's what we saw the market. And then what else happened? Well, the more we saw the market tend towards Biden, it was always, and I've heard the people talking to me about it, well, he's going to raise taxes and he's going to overregulate, and the Dems are really bad for the market. You know what? The bottom line is, right now, no rules 2020. We're in the middle of a pandemic. Until we get a handle on the virus and we once again have a robust consumer, we're not going to have a good economy. You and I need to really, to your audience, realize that it's not any disrespect to the people who are suffering, who need a lifeline. The market does what it wants to do. The market is up on a function of people who have got some money. And the market is very forward looking, right? The market is pricing in a perfect case scenario of a vaccine, right? And a return to some level of normalcy a year or so down the line. That's what Dow 30,000 means. No disrespect to the people that sometimes markets and economies trade in concert, as we saw coming into February 12th. But what we've also seen historically is that in the time of crisis, sometimes you have this, my favorite word of the year, bifurcation, where they go one way and they go another way, where the market took off on stimulus, on liquidity pumped in by the Fed, on a huge influx of retail new investors, right? And people with money pricing in great trading opportunity. And at the same time, we are now confronted by a country that is in deep, deep trouble, a spiking virus, and deep economic instability that may take a long time to correct. So the market is telling us that they're confident that Mr. Biden is not going to do anything, at least in the first year or the second year, or if he doesn't have the Senate in order to do it, to do anything that will be counter to a market recovery, to an economic recovery.
Gotcha.
My hope is that the economy will follow suit of the market and catch that backwind and go with
a huge resurgence within the economy.
Market catch up with the economy, because then we'll revisit March 23rd again.
That's because if there's no catch up or like a huge ramp up, the market will have to deprice it down if it's already pricing in something good down the road.
Correct. Let's look at the reality of the economic business model that these companies are going to have to adopt, right? So Chairman Powell said in a it was a week after his Fed minutes, he was talking at a conference, and someone asked him about the economy on the other side, and he said, the economy that we're going to see on the other side of Crazy Town is not even going to resemble anything we've ever seen before, right? When you've got businesses that at best within a pandemic are running at 25 to 50% capacity.
There's
right?
no way. Like a restaurant.
Business
Restaurants barely break even. Restaurants barely break even at 100%. At 25, 50%, there's almost next to no point of even trying to compete. I see so many.
You open your doors, you close your doors.
Yeah.
Right. So,
It's a new
and
world coming.
what's that?
It's a new world that's coming.
It's a new world that's coming, and we don't know what it's going to look like. The market may react to it. It may not, right? You know, look, there've been from a trading perspective, from a human perspective, my empathy and my care and love for people who are suffering is huge. As a broker and a trader, right, and somebody who interprets the market, there's a completely different thing going on here, right? This has been for those who are in the market and who have found the ability to get some exposure to the stock market. And I always press it and I try and tell people this is an amazing opportunity, right? You know, and I'll talk to you about it later. I'm a big believer in technical analysis, the fundamentals of trading, that hope's not a strategy, right? That what we've seen is, rather than looking at this as a epic global biblical event, many people in the market have looked at this as an incredible opportunity, right?
Correct.
Trading, and you guys you guys do that also when you talk about it, because throughout all of this, we've had more SPACs, we've had more IPOs, and
Yes.
both very successful. We've had whole sectors of markets, whether it's the Pelotons, the Wayfairs, the Fevers, all those that have Fiverr, right? Fiverr, $230. I was there the day it went public at 30. It's crazy.
And it fell to 13 too, which was wild. And it's gone parabolic. Same with names like DocuSign, Peloton. How about a company like Overstock, right?
Those opportunities were there if you were able to stop, look, and listen, right? And see and look for opportunity. What stocks are going to be able to pivot in this pandemic? What stocks are going to be there for us in the new world we're living in? The DocuSign, the Zooms, the video chatting, the Wayfair. Funny to look, you know, I didn't understand why car sales were spiking. I didn't understand why housewares companies were going from 30 to 400, right? And then as you sort of analyze it and you look in the nooks and crannies of it, you go, okay, so
there's much liquidity out there.
What's that?
There's so much liquidity out there that it has to go somewhere.
Well, it does, but my question is why, right? So there's a very human reason that Zoom went up and that Wayfair went up and that car sales went up. People were still going to travel, but they weren't going to fly. Our nature is to want to be with family and whatnot. So people
You're
were
killing
buying
me with this Wayfair talk, Pete. You're killing me. You gotta pay attention to their competitor, Overstock. That's the better one.
No, I'm a big fan of Overstock. They're both in the same. They're both in the same biz.
More of a joke for our members. Oh, it's one of our. We've been long Overstock since $7. If that makes you feel good.
It's a masterpiece. But what I'm trying, as I said to you, I don't recommend stocks.
No. I'm just being funny for our audience because they know we're big fans of Overstock.
Oh, okay, that's funny.
Some of them watching they're seeing my mentioning Wayfair. They're like, "Oh man, JR's probably just dying inside."
Sorry about that.
No. Oh, no, keep going. It's sorry to cut you off. Had to be.
What I want people to know is why, if you were to ask them, some people who don't really look at it forensically will just go, "It's hot. It's on fire. La la la. It's a stock I got to be involved in. It went from 7 to 300." But for me, I find the human element. Why is Wayfair going up? It's a very human thing. Yep. The bottom line is, so you're talking about some people out of work, some people unemployed, don't have any money, no disposable income or whatnot. But the other story is that there are people who are bringing their grandparents out of nursing homes. They're having their parents move in. They've got to remodel their house.
Yep. Or work from home. A work from home office. You got to get office supplies, all types.
There you go. Overstock and Wayfair. All day, all night. Bring them on. And that's why they did what they did.
Yep.
And
like you're mentioning the previous. So my last question for you, because we're almost near the hour point here. We'll finish it with the number one discussion in everyone's mind is SPACs and IPOs. I'm looking at the 2021 IPO pipeline. It's looking very, very strong coming up. SPAC market kind of seems, from the media perspective, is they're trying to make it seem like a bubble, but I actually think the SPAC market is very opportunistic if you know which ones to get into. My question for you, we're not calling tops or bottoms, is do you share the same view as me that the 2020 pipeline for these SPACs and IPOs are as strong?
Huge. Look, IPOs are one of my main bread and butter things, right? So on the floor of the stock exchange, the price discovery, what makes us so significant, relevant is the floor of the stock exchange is the place for IPOs, right?
Right.
And I will always bring up friggin' Facebook law turning against us and going to NASDAQ. And if you remember that day, you must have been a little kid when the day that they went public and nobody got their reports, right? And it opened at 18 and went to 45. And by the time guys got fills on their orders, because of the NASDAQ electronic marketplace, it was trading back at 20 bucks. And there was a disaster. So I believe our forum and our marketplace for IPOs, the New York Stock Exchange, is the preeminent one in the world. That being said, for me, this is my bread and butter. I am in the crowd. If anyone's ever seen me, I am there.
I believe everyone's seen you. Everyone knows who you are. When I told them you're coming on the show, they're like, we know him. We just don't know much about him. Get him to talk about him. So we need more
Cool.
to hear what he does.
So I would love to do a whole interview about what it's like when an IPO.
Let's do more. Yeah,
Okay.
we got to hear what took Palantir so long to get listed. We were waiting from 10 till 2 p.m. to buy that one.
Well, that was a NASDAQ. That wasn't a New York one. Let's be clear.
Palantir's on the NYSE.
No.
No?
I don't think.
Let's see. Let's pull it up.
I may be wrong.
Yeah, I believe it's on the New York Stock Exchange. Pulling it up right now.
Go back to your question.
Palantir's on the NYSE.
Okay. The SPAC market, okay, as you said, it's opportunistic, right? People cannot presume. They need to look into the nooks and crannies of the company, right? It's another market, right?
Correct.
They fast-tracked it. Look, we were doing 1 or 2 SPACs a month. It was not that big a deal. People were trying to understand the business model.
It's
it
not
became
something new.
in
Something
pandemic.
that's been around since the 80s, right? It's not something that's new. It's been going for a while.
Right, but it never caught people's attention.
And
as people try, look, the last couple of years, we've seen Spotify, we've seen direct listings, we've seen IPO markets, right? We've seen the whole nature of IPO struggle in the time where we started listing companies that were not profitable yet, right? We ran into that with the Uber and the WeWork, right? That was another cluster heck, right?
That was nasty.
Use bad language, but I believe the pipeline is strong and robust. It's another thing to talk with you about. We should talk IPOs. We should also talk pre-IPO market.
Let's do it.
Thing I'm involved in is the bottom line. It used to take years for companies to go from private to public, right? From trying to get their all the ducks in a row to the roadshow to come to market, the valuation, the capitalization. It was very complicated. And then the pandemic came, and then they realized, well, now we have 3 new opportunities: direct listing, SPAC listing, and IPO markets. Right. We need people to keep their interest. Where there are companies coming to market that are just explosive, right? What do we have in the pipeline now? We've got Airbnb and DoorDash. We've got China Uber coming out. So it's a matter of, what's that?
DD Chang.
Correct. So we want people to keep we want the floor of the exchange and NASDAQ, no poo-poo on NASDAQ, to stay relevant. We want new companies to be able to come to market. We want the public to stay interested, right? It's a super exciting market. And it's funny when the attention, look, a lot of these companies for years came to market before they were profitable. They weren't profitable for years. Look at Uber, right? Okay, it doesn't really matter. The bottom line is that's not a reason not to invest in a company. Right. It's some long-term thinking. But the bottom line is there's so much fresh ideas, new fresh companies, right? We're in an unprecedented time now where people have the focus to get involved in the market. There's a whole broad base clientele getting involved. The IPO market is robust, it's strong, and it tells us what it thinks. The last number of IPOs that have come to New York and NASDAQ have flown, right? Look at it. Palantir was trading pre-market for $4 for the longest time before it went on the roadshow. It ended up coming. It was fairly fast-tracked. I know you waited a long time for the opening, but
we were fine of 10. We were fine of 10. We like Palantir.
$10, right? I mean, it got slam bam the last day of trading, right? But it went from $10 to $28 to 30 something, right?
In under a year. So last one. Sorry, I know I said the last one's the last one. What would be your preference as someone who's been on the floor? Direct listing or traditional IPO?
Traditional IPO. There's no question about it. And I think we need to have a whole conversation about it.
Let's do it. We'll get it booked for, let's say, episode 6 or 7. Let's try to time it around a very big IPO, and that way the audience could have a very good.
We could maybe even do the interview from the floor of the exchange. Right? How cool would that be?
That'd be amazing.
So I'm a firm believer in the IPO process. Yeah. I think it's super important, and I tell this to people when we're in the crowd with the directors of the company on the morning when it happens, and it takes hours and hours to open up. That's your level of frustration, because we've got to see where all the bodies are buried. The initial public offering, what does that mean? The nature of the idea is we are offering this stock to the public, and we need to get their attention. Where do they find value? We know where the directors have value. We know the community has value, right? But what we want to do by an IPO is to find out where does the public think there's value?
Makes sense.
Right? Where a stock opens and how it opens. And you don't build a building by put a brick up here and a brick there. You build a building correctly, a building that an earthquake with a foundation, with one layer and two. That's what an IPO is about. After all the trip they went from a garage like Apple did through the world and coming finally to become a public company is an incredibly long, circuitous road. But when you get to the stock exchange, it's not the end of the road, it's the beginning. Because once the public is involved, this company goes from being a 10, 20, 50 million to $1 billion number, right? And the way it opens and the way it's handled and the information and transparency that we get from from price discovery of the price, people don't think it's a big deal where the stock opens. Let's just open it already. It's noon. I got to go to lunch. It's so important, right? You can have a stock that opens incorrectly because they fast-tracked it and they didn't do their homework. And we didn't let everybody know where it was going to open. That may open above the deal and go straight down.
Right.
The bottom line is when we're in there and the stock is going to open below the deal price, and you can see the face of the directors getting a little bit peaky because they're going, oh shit, we sold a bunch of this at 18
it's too in
New York. The 14 price point is where the public finds interest and finds value. And if you open it right, the stock will go from 14 right back to 18. So that whole process of discovery is extraordinary, and I'd love to chat about it.
And what you're saying is pretty much what I took from that is don't take it for granted. For, say, the average retail trader who's expecting an IPO or a company you want to list right away, don't take the process for granted and don't look at it as just a 4-letter ticker with a number sign that's going to move. There's an entire process and everything that goes involved into making that happen, right?
There's a support staff. There is a whole journey that companies and people and money lost and made and blood, sweat, and tears that went into that coming down to the floor of the exchange to go public, right? That it's a huge process. If it's not done right or there are any glitches along the way, it can have ramifications going forward. And that process that morning when it opens and what we go through, that's my bread. That's where I spend 4, 5, 6 hours sometimes standing in one place, talking to people, telling the story, getting involved, giving my customers information. It's so important. There are people who on that IPO day become investors and then they become traders. There are people who are in that in a minute. But the way it opens, fundamentals and the foundation that we established on the floor of the exchange, not electronically, human to human, talk to talk, open business, price discovery has huge implications in how it opens, how it trades, and how it goes forward. And the people's perception.
Amazing. I can tell you're extremely passionate about it, and we're going to have to do that episode on IPOs and all of that in the future. So I want to thank you for coming on our show. We're hitting the hour mark here, but we're definitely going to have to bring you on again because that was an amazing hour, and I'm pretty sure everyone's going to enjoy that hour. So thank you so much from everyone at Stock Church for coming on. And yeah, so if you have any closing remarks, let us know. But yeah,
100%. I'd love to close with a couple of things. So for me, it's
people find you as well. Where can people find you online?
So on Instagram, I'm Einstein of Wall Street. On Twitter, I'm Einstein O Wall Street. I'm really easy to reach. You DM me, I will respond. That's the way I am. You can find me super easy on LinkedIn, Twitter, Instagram. I'm starting a new YouTube channel in about a week. I'm going to be selling Dow 30,000 hats. People can get them. You know, I'm coming out with a. Hold on, stay there.
Oh, I'm here. I'm not going nowhere.
I'm coming out with the Einstein on Wall Street motivational
toy.
Oh,
let's go. That's awesome.
Is going to need one of these on their desk to get the good trades. The bottom line is education is key. Technical analysis is key. Hope is not a strategy for trading. I'd love to come on again and talk about I've curated a day trading school to teach people, whether it's a beginner, an intermediate, or an advanced, about the fundamentals of technical analysis in trading this volatile, crazy market, right?
Mhm.
And I want people to, if you find something you love to do, you'll never work a day in your life. So the stock market, whether you become a trader or an investor, or you just love the branding and marketing of what we do down there and public companies, there's something you can find in there. If you do your homework and look, that will find you something you'll love to do.
Amazing.
On out.
Amazing. Thank you so much.
Pleasure. Great.